Have you ever deposited a large amount of cash into your bank account and wondered what happens after the cashier takes the money? Most people assume the transaction is complete. The cash is counted, the receipt is printed, the balance updates, and that's the end of the story. But behind the scenes, there's an entire system working quietly in the background, one that most customers never see and very few people fully understand. The surprising part isn't that banks monitor unusual transactions. By law, they often have to. The real problem is that many honest people accidentally make decisions that can create unnecessary questions about perfectly legitimate money. Before we go any further, take a moment to like this video and subscribe. We bring you straightforward updates on UK banking, pensions, retirement, savings, and personal finance, so you can make informed decisions with confidence. Now let's clear up one of the biggest myths you'll hear online. Perhaps you've seen videos claiming that depositing more than a certain amount automatically triggers a report to HMRC. Others insist there's a secret number you must never exceed. These claims spread quickly on social media because they're simple. Unfortunately, reality is rarely that simple. In the UK, there isn't one universal cash limit that automatically sends a report every time you cross it. Instead, banks look at something much more important: patterns. That's because modern banking isn't just about individual transactions. It's about understanding whether activity on an account makes sense compared with its normal behavior. Imagine someone who usually deposits their monthly pension and little else. Then one day they walk into a branch with several £1,000s in cash. Naturally, the bank may ask where it came from. That question isn't an accusation. It's part of the bank's responsibility to understand significant transactions taking place through customer accounts. Most of the time, the explanation is perfectly ordinary. Perhaps they sold a car, perhaps they received an inheritance, perhaps they've been keeping cash at home and finally decided to deposit it. Perfectly reasonable. But this is where many people unknowingly make a mistake. Instead of depositing the money in one clear transaction with supporting documents available if needed, they decide to spread it across several visits. It sounds sensible, less noticeable, less attention, less likely to raise questions, or so they think. Ironically, that approach can sometimes make the activity appear more unusual than depositing the full amount at once. The reason is straightforward. Bank monitoring systems don't simply analyze the size of individual deposits. They also analyze behavior over time. Multiple similar cash deposits arriving over several days or weeks may naturally prompt additional questions. Again, this doesn't mean anyone has done anything wrong, nor does it mean every customer making several deposits will experience problems. But understanding how patterns appear is one of the best ways to avoid unnecessary misunderstandings. Let's imagine a common example. You've just sold your caravan for £9,000. The buyer pays in cash. You return home with the money and start thinking about what to do next. A friend says, don't pay it all in together. Split it up over a few weeks. That advice sounds reassuring. But ask yourself one question. Why hide something that has a perfectly legitimate explanation? If the money comes from an honest sale, supported by a receipt or written agreement, transparency is often your strongest protection. One clear transaction supported by documentation tells a simple story. Several smaller deposits spread across different days may tell a more complicated one. There's another situation that catches many retirees completely by surprise: family gifts. Children sometimes help parents financially. Grandparents receive birthday gifts from family. Someone sells a property and decides to share part of the proceeds. These situations happen every day throughout Britain. Receiving a genuine gift isn't automatically suspicious. The important point is being able to explain where significant sums originated if you're ever asked. That doesn't require complicated paperwork. Often a simple written record showing who provided the money and why is more than enough to help create a clear financial trail. The same applies when moving your own savings. Many people change banks to receive better interest rates or improved customer service. Others simplify their finances after retirement by closing several accounts and consolidating everything into one place. Again, there's absolutely nothing unusual about that. But moving money in one clear transfer usually creates a much easier financial record than repeatedly shifting smaller amounts without an obvious reason. One clean transfer, one confirmation, one statement. Simple. There's another point many people misunderstand. Banks asking questions doesn't automatically mean HMRC is investigating you. These are separate processes. Banks have legal responsibilities to understand unusual financial activity. HMRC has responsibilities relating to tax. Sometimes those responsibilities overlap. Often they don't. Assuming every question from your bank means you've become the subject of an investigation simply creates unnecessary anxiety. Most customers who are asked about transactions provide a straightforward explanation, produce any relevant paperwork if requested, and carry on with their lives exactly as before. The conversation ends there. And that's because honesty, clarity, and documentation usually answer the questions quickly. Where people sometimes encounter difficulties is when panic takes over. Imagine someone standing at the counter becoming visibly nervous because they're worried they've done something wrong. They begin offering long explanations, changing details, mentioning different figures, apologizing repeatedly. Ironically, nervous behavior can sometimes create more confusion than the original transaction itself. That's why simplicity matters. If you're asked where the money came from, answer honestly. Keep it brief. Support your explanation with documentation whenever possible. Then let the paperwork speak for itself. Because when legitimate money is accompanied by a clear financial history, there is usually very little left to question. And that's the lesson many people wish they'd understood long before they ever walked into the bank with a large cash deposit. There's one simple question you should ask yourself whenever you're about to move a significant amount of money. If someone asked me where this came from 6 months from now, could I prove it in less than 5 minutes? If the answer is yes, you're already in a much stronger position than most people realize. The reason is surprisingly simple. Memory fades, paperwork doesn't. Think about how many financial transactions you've made over the past year. Could you explain every one of them today? Probably not. Now imagine trying to remember them 3 years from now. That's why keeping records isn't about expecting trouble. It's about making life easier if questions ever arise. Let's say you've sold your car. The buyer pays you by bank transfer or cash. The sale is completely legitimate. The smartest thing you can do isn't worrying about how much you've received. It's keeping a copy of the advert, the receipt, and any written agreement showing the date, the amount, and the buyer's details. Those documents tell the story long after you've forgotten the details yourself. The same principle applies to family gifts. Parents help children, children help parents. Grandparents receive money from relatives. These situations are perfectly normal. But if a substantial amount changes hands, keeping a simple written note explaining the gift can prevent confusion later. It takes only a few minutes. Yet that small habit could save hours of unnecessary stress years down the line. Now let's talk about something many people never consider: moving your own savings. Perhaps you've found a better savings account. Maybe another bank offers a more competitive interest rate. Or perhaps you're simplifying your finances by closing several older accounts. There's absolutely nothing wrong with that. After all, it's your money. But when moving funds, clear records matter. Transfer confirmations, closing statements, opening documents for the new account. Keeping these together creates an easy-to-follow financial history. If anyone ever asks where the money originated, the answer is already sitting in front of you. One of the biggest mistakes people make is assuming they need to explain far more than they're actually being asked. Imagine a cashier simply asks, "Can I ask where these funds came from today?" Some customers immediately become anxious. They begin apologizing. They offer lengthy explanations covering years of financial history. They worry they're somehow in trouble. In reality, a calm, honest answer is usually all that's required. "I sold my car. This came from my savings. It was a gift from my daughter." Simple, direct, truthful. If supporting documents are available, even better, because straightforward explanations supported by paperwork are far easier to understand than long, emotional conversations. There's another issue that's becoming increasingly important: digital banking. Many people now transfer substantial sums without ever entering a branch. That convenience is wonderful, but it also means it's easier than ever to lose track of documentation. Download confirmation receipts, save important emails, keep copies of significant transfer confirmations. Creating a digital folder for major financial events takes only a few minutes, yet it creates a permanent record that can be invaluable in the future. Another habit worth developing is reviewing your accounts regularly, not because you're expecting problems, but because unusual activity is easier to spot when you're familiar with your own finances. Check your statements, review unfamiliar transactions, make sure payments you've authorized match what actually appears on your account. Good financial organization isn't about becoming suspicious, it's about staying informed. Now let's address something that worries many retirees. What if my bank contacts me about a transaction? First of all, don't panic. Banks ask questions every day. Most conversations end within minutes, because customers can clearly explain the source of their money. Being asked for information isn't the same as being accused of wrongdoing. In fact, financial institutions have responsibilities to understand certain transactions as part of wider efforts to combat fraud, scams, and money laundering. Those protections exist to safeguard both the financial system and ordinary customers. The important thing is responding calmly, provide honest information, produce any documents requested. If you're unsure about something, ask questions rather than making assumptions. And if you're ever contacted by someone claiming to represent your bank or a government department, remember one essential rule. Never provide personal information simply because someone contacted you unexpectedly. If you're uncertain, end the conversation politely. Then contact the organization yourself using an official telephone number or website you already trust. Scammers often rely on creating urgency. They'll tell you your account is at risk, that your money could be frozen, that immediate action is required. Their goal is to make you react before you think. Legitimate organizations understand that customers sometimes need time to verify who they're speaking to. Taking a few extra minutes to confirm you're dealing with the real organization is always worthwhile. Finally, remember this. Banks aren't looking for customers who legitimately sell a car, receive an inheritance, move savings between accounts, or accept genuine gifts from family members. Their responsibility is to identify financial activity that genuinely requires further attention. The easiest way to help legitimate transactions speak for themselves is through transparency. Keep clear records, retain important documents, move money in ways that create straightforward financial histories. And never assume that trying to make a transaction appear less noticeable automatically makes it safer. In many situations, clarity is your greatest protection. Before we finish, here's one practical habit you can start today. Create a folder either on your computer or in a filing cabinet and label it something simple like important financial records. Asterisk. Every time you receive or move a significant amount of money, place 3 things inside. A short note explaining where the money came from. The document supporting that explanation, such as a receipt, sale agreement, or confirmation letter. And the relevant bank statement or transfer confirmation. That's it. 3 simple pieces of information. 5 minutes of organization. A record that could prove invaluable years later. The vast majority of people will never need to produce that folder. But if questions ever arise, you'll have everything you need in one place instead of trying to reconstruct events from memory. Good financial habits aren't about living in fear. They're about creating confidence. Confidence that your records are organized. Confidence that your money has a clear history. And confidence that whatever questions may arise in the future, you'll be ready to answer them with facts rather than guesswork. If you found today's video helpful, share it with a friend or family member, especially someone who regularly deals with cash, is planning to sell a valuable item, or is managing retirement savings. A simple conversation today could save someone unnecessary worry tomorrow. So don't forget to subscribe for more easy-to-understand updates on UK banking, pensions, retirement, and personal finance. Thanks for watching, stay safe, and I'll see you in the next video.